All right, everyone. So I know you've been seeing the surge in Bitcoin's price above $43,000 a coin. I took this trade with my members recently. I personally invested over £50,000 into crypto, and I really want to talk about why the crypto price is rallying. And it's all down to the market's expectation that interest rates by the US central bank are going to be coming down, and it's especially important to understand the bond market when you're trading crypto, because if you can understand the interest rates on bonds drives the crypto markets. And in this video I'm going to show you, in this latest live webinar I just finished with my VIP members, me explaining how bond markets control the price of crypto and the price of stocks, because crypto and stocks actually move hand in hand. This is really going to be an eye-opening strategy for you when you're investing into crypto. If you miss the first rally, this time you can catch the second rally by watching the bond market, and especially interest rates on a 10-year US government bond, okay, known as the yield. Okay, so guys, enjoy this video. Please like, comment, and subscribe. I hope this helps you on your Bitcoin journey. And if you want to come and join the VIP members and I'll show you the results of them actually following my Bitcoin investment, then drop me a message. All right, guys, so what we're going to look at now, we're going to look at Bitcoin. We're going to have a look at the cryptocurrency, what's been happening, why is crypto rallying higher at this moment in time, and how can we catch this move and make money from the biggest crypto coin continuously going up in value. Okay, so if we just take a look at the performance, guys, of the cryptocurrency, we can see since the beginning of January, crypto currently is up around 150%. Okay, that is way more than the stock markets. Okay, that's only up currently in 2023 by around, I mean, like 15, 16%. That's the US stock market, the biggest stock market in the world. Okay, so crypto is outperforming everything right now in terms of gains. And as you guys know, and I'm going to show you, when crypto goes on a bull market, no other market can compete with how much this cryptocurrency rallies in value. Okay, so that's why yesterday, guys, I fundamentally really started to invest in cryptocurrencies. And all I want to do in this webinar, I need to just educate you guys on why is crypto going up. Okay, so there's an article here I'm going to break down for you. Okay, this is on Bloomberg. This is what all the investors read. Bitcoin surges past $42,000 as crypto rally gathers steam. Okay, and all you need to read is this little key bit here. It's being driven by interest rate cuts by the US central bank and this new ETF that's being released for the biggest financial firm in the world called BlackRock. They're going to release an ETF. So it's called an exchange traded fund, which basically makes it a lot easier for more people to invest in cryptocurrency. Okay, so if I scroll down in this article and I go down to the key points that I was highlighting just a second ago, you can see over here, it says investors are increasingly convinced that the Federal Reserve is done hiking interest rates as inflation comes down in the United States. Okay, turning the focus to the likely extent of rate reductions next year, talking about the Federal Reserve cutting interest rates. All right, the change backdrop in terms of what the Federal Reserve is doing, because they've been raising interest rates recently, and I'm going to show you how that was causing stocks and crypto to crash, and now the markets are betting that interest is going to go down. It's fueled a rally across global markets. I'm going to show you all the stock markets right now. They're all ripping higher at exactly the same time as crypto, but no other asset class can move like crypto. So if we can catch this move, we're going to make some serious money. And that's hopefully what I can show you guys about the ins and outs of why the markets are moving. All right, guys. So another reason is this ETF coming. Okay, Bitcoin continues to be supported by the optimism around the SEC, which is the US financial regulator, releasing an ETF alongside the markets betting on rate cuts. Okay, and then on top of that, to give the Bitcoin an even more of a supercharge, we have Bitcoin's halving. Okay, so basically the amount of Bitcoins that can be mined are going to be halved, because there's only a total supply of 21 million Bitcoin tokens that can be brought to the market until there's no more Bitcoins. Okay, and every time the coin has always hit record highs in the last 3 halvings, because now there's less supply and there's always going to be demand for crypto, right? So what I want to show you now is you can understand why the markets have been buying crypto in terms of the interest rates and the ETF and the halving of Bitcoins. Now I want to show you in more detail just the understanding of Why was Bitcoin rallying in 2021? Why did it crash in 2022? And now why is it pushing back higher in 2023 going into the new year? If these interest rate cuts go through as the markets expect. All right. So what I want to show you is something called this. This is the bond market. The bond market drives fucking everything, okay? Interest rates drive every single market because the price of money affects how much people have to spend, okay? And what you're going to see here, and I want to show you a beautiful correlation to this, is you will see that inflation in the United States in 2022 was way out of control. Around March, it was at 8%. Central banks have a 2% inflation target. This is just a spreadsheet that I use to analyze an economy. We're looking at the United States, but the most important thing is to focus on is where is inflation? Because central banks use interest rates to control inflation. Why? If a central bank raises interest rates, your credit card payments go up, your mortgage payments go up, your car loan payments go up, your student debt payments go up. Everybody's ignorant about money in the economy because they don't teach you about money. If you can understand this, this is how they control inflation. Keep everyone stupid. Everyone needs to borrow money. And when it comes to controlling inflation, they raise interest rates and everyone has to pay out more interest on all these monthly payments, okay? So in March 2022, inflation was at 8%. The central bank in March 2022 started to raise interest rates because they had to get inflation back down to their 2% target. So you can see the first rate hike came in March of 2022. Over here, you can see, look, the first rate hike happened in March, all right? And this was a central bank trying to raise interest rates to control inflation. And the central bank moved rapidly. They went from 0.5% interest rate up to 5.5% interest rate in America. Okay, so look at the bond market. So the bond market is if you borrow money to the US government over 10 years, when you're looking at a 10-year government bond, the government's going to pay you a specific amount of interest on the money you borrow to them. So in March 2022, you can see the interest rate, look on the right-hand side over here, was paying 1.68%. So let's say I borrow the government $10,000. They're going to give me $168 a year for the next 10 years, and I'll walk away with a total profit of $1,600 within 10 years, okay? That's just looking at a 1.6% interest rate, all right? Now, when a central bank is raising interest rates, what I need you to understand is that the interest rate that they set affects your mortgage payments, credit cards, car loans, student debt, because that rate of interest that the banks are charging you when you borrow money from them is pegged above the 10-year government bond. So this is known as a treasury benchmark. Whatever the 10-year interest rate is that the government has to pay on their debt is going to affect your mortgage payments, okay? So when the interest rates in the US in March was paying 1.67%, and as the central bank was raising rates aggressively, the mortgage payments, credit card payments, car loan payments of everybody went up. So if the interest rate on a government bond is 1.8%, your interest rate on your credit card is probably 2.8%. Banks always charge a premium, okay? So what you're seeing is, for an example, as the interest rates went up in the United States aggressively into October 2022, look what happened to the stock markets and cryptocurrencies. All right, so let's start off with stocks and then I'll show you the correlation between the two. So you can see if we get the US stock market, S&P 500, and we get the price of the 10-year yield, you can see the correlation between the two. Look what happened. So let's go back to the stock markets. So as soon as the interest rate started to go up in the United States, look what happened to stocks. Stocks tumbled immediately. As the interest rates kept going higher, look at stocks. They went all the way down and they hit a bottom in October 2022. Now, let's look at Bitcoin. Bitcoin did exactly the same thing during exactly the same time period. You can see here, the bond market started to go up in March 2022. And look at cryptocurrency. Look at the Bitcoin. You can see when interest really started to take off, that's when Bitcoin hit its peak and Bitcoin tumbled the whole entire time until when? Same time, October 2022 is when cryptocurrencies bottomed and stopped falling. And that was at exactly the same time when the stock market bottomed. Look, here's the bottom of the stock market on the right-hand side. And look on the left-hand side, you can see the lines match up. That was exactly the same time that Bitcoin reached a bottom. Okay. And why did that happen? Because as interest rates are going up and up and up, investors know people can't spend as much money anymore because their interest payments are increasing. So what the investors understand, the demand for Bitcoin, the demand for stocks are going to go down. So the earnings of companies in the stock market are going to start to go down. So investors don't want to hold stocks. And investors know that people are going to slow down how much they buy Bitcoin at the same time for the same fundamental reasons. People's spending started to get reduced. So crypto went down, stock markets went down, okay? This is because what happened, as I showed you here, interest rates on government bonds was rallying higher. But notice, interest rates on government bonds peaked in when? October. Why did they peak in October and start to decline? Why did interest rates go from 4.3% on the right-hand side and then for like 3-4 months from October all the way into, actually, sorry, longer than that, into May. So around, what's that, 5, 6, 7, around 8 months, you saw the bond market start to decline in terms of the interest rate. And then look what happened to Bitcoin straight away. Bitcoin took off during this whole entire period of time. And exactly the same time, so did the stock market take off at exactly the same time. Why? It's all because at that time, inflation peaked in July. And by October, it had fallen for 3 months. And the markets back in 2022 were pricing in interest rate cuts. They got it wrong because it hasn't happened yet, but they were pricing in interest rate cuts. And as soon as the markets bet interest rate cuts are coming, bond markets start to price in those interest rate cuts. That's why the bond yield was declining. And what would that mean when the bond yield's declining? As that yield paying, and yield just means interest rate, okay? When that interest rate was 4.29% and it fell all the way down to, let's say, 3.4%, what happens to your mortgage payments, credit card payments, car loan payments, student debt payments? They all go down. So what does investors understand? People's spending is going to be able to be reduced, be increased when their interest payments go lower. That's why the markets were buying stocks. That's why the markets were buying crypto. Okay. But notice, look how beautiful the correlation is. Okay. Then the markets got it wrong because at this point here, when the crypto had been going down, the central bank in the US kept saying, we're not done raising interest rates. We need to raise interest rates for longer. And the US started printing a lot of money recently, and the markets don't like it when governments get into too much debt. And the interest rate in government bonds went up again. And look what happened when the interest rate went up again. On the left-hand side, stocks did what? Dropped immediately. You can see the drop in stocks immediately. Okay. And if you look over to Bitcoin, if you look over to Bitcoin, look what happened to Bitcoin at exactly the same time. Let me just take off that. Look what happened when the bond market went up again. Look at Bitcoin. It went down again. Can you see? Bitcoin dropped. It went down in value at exactly the same time in stocks. It dropped 22%. So are you seeing the correlation now? Interest rates on government bonds go up, stocks, crypto go down. Okay? Interest rates start to come down, stocks and crypto go up. Because you got to understand, just remember what I said, the interest rate that you pay on all the money you borrow from banks, whether it's a car loan, student loan, mortgage, credit card loan, the interest rate on that loan is pegged to the 10-year government bond. And it's a premium interest rate. So you pay more interest, the more the 10-year yield goes up. You pay less interest, the more the 10-year yield comes down. It's really easy to understand, okay? So, as I've shown you now, you can see the correlation. So, why is crypto taking off so aggressively now? No surprise, look what's happening. The bond market is now coming down. Why? Why are interest rates on government bonds dropping? Because inflation in the US is dropping rapidly. It's going down a lot quicker than the markets were expecting. Here is the latest chart. Inflation in the US was at 6.5% in January. It's now 3.2%. It was 5.7%. When you strip out food and energy prices, it's gone down to 4%. Inflation is coming down quickly. And now the markets are betting on interest rate cuts. So this is a spreadsheet that I use to build the market's expectation for interest rates. And you can see when you're looking at it, that interest rates are at 5.3% now, but look where they're dropping down to. They're expecting interest rates, all right, by the end of 2024 to be 4.3%. They're betting on 1% interest rate cuts in the United States. So because the markets are betting on interest rate cuts, because inflation is falling, what's happening is it's being priced into the bond market right now. And look what the bond market's allowing crypto to do. to push up. And the more the markets see inflation falling, the more the markets bet on interest rate cuts, the more crypto moves. So now you're understanding why crypto is going up. And look, it's the same thing as stock markets, guys. Look, when did stock market start to go up? Exactly the same time when the bond market started to go down. That's your correlation. So now we understand the markets are looking at inflation coming down. Beautiful. We know what the central bank is going to do. The central bank is going to cut interest rates. Why? Because interest rates are so high right now, they're betting on a recession. Okay. And when the central banks have a mandate to keep maximum employment and inflation at 2%. But when you get a recession, you get high unemployment. So that what they're going to do is when inflation gets just close enough to the 2% target, they'll start to lower interest rates. And the markets are expecting this around, I think it's June, May next year. They're expecting rate cuts to start happening, and they'll slowly reduce interest rates enough to still control the economy and get inflation lower without causing mass levels of unemployment. Now you understand what's driving the bond market, and now you understand what's driving cryptocurrency. Okay. And to show you just how correlated stocks and crypto move together, now let me show you this. A lot of people don't understand volatility. Now, volatility is something that tells you how much cryptocurrencies fluctuate on a daily basis. How much do stock markets fluctuate on a daily basis or a weekly basis or a monthly basis? Once you understand fundamentals and volatility, this is how you can understand market moves. So remember I told you lower interest rates are good for stocks and crypto. Why? Because the cost of money is cheap and people can borrow more, spend more, and it drives up the value of assets because there's a high demand. That's why after the what's it called? COVID-19. Sorry, guys. Look, COVID-19 happened in 2020 in when? It was January, February time, right? 2020. Look what the central bank did in response to what happened. Interest rates in January were 1.75%. COVID hit. Everyone got locked up in their house. Central bank slashed interest rates immediately. Look, 1.75% to 0.25%. When did the first rate cut come? In March 2022. You can see it there, right? Look what happened to the stock market in March 2020. Look, soon as they cut interest rates, the stock market took off immediately, right? What happened to cryptocurrency in March 2022 at exactly the same time as the stock markets? Boom, look at the move. They move at exactly the same time, but look how much fucking Bitcoin moved compared to the stock markets. Bitcoin went on a rally of 1,600%. 1,600% was the move in Bitcoin. Stock markets rallied 100%. More than 10 times more return on Bitcoin than stocks. So can you see? Now, what I want to show you is just to even show you how much they move together, because this is going to give you the confidence to know what to look at when you're going to start investing in Bitcoin. Because after I show you this, trust me, you're always going to want to get investing. All right. So let's have a look. Let's have a look. There's something called volatility. So what volatility means is you can use spreadsheets and historical price movements of these assets to understand their fluctuations, right? So let's go back to 2021 when that stock market was going up. So look, in 2021, you can see, guys, over here, one second. You guys can see over here, when I get this chart back up, in 2021, look, the stock markets are rallying higher. Why? Lower interest rates, which means people can spend money on goods and services. Companies going to earn more money. Everyone wants to buy stocks because they know that stocks are going to be performing well because their earnings are going up. Investors want to buy stocks. No surprise, at exactly the same time in 2021, everyone wanted to buy cryptocurrencies at exactly the same time. Okay, so now let me show you the correlation between the two. This is looking at volatility. In the stock market, S&P 500, when we look at this analysis, you can see this was in 2021. It's taken all the data on a monthly basis of cryptocurrencies, and it was taking stock markets. The S&P 500 at that time fluctuated on average by 5%. This is what the spreadsheet tells you. Look, 5%, 5%. Going back 2 years, the average is 8%. Obviously, 2 years is too far. So look, the average between 6 months and 1 year was 5%. What was the average for Bitcoin at that time? What was cryptocurrencies monthly fluctuation. Crypto was around 40%. It was between 35% and 50%. If you average the two, you get around 40%. But let's say it fluctuates between 35 and 50%. So look at this. Now, this is when people start telling you cryptocurrency is crashing in the future. You'll be like, you're talking shit, because you'll understand that these are just normal fluctuations. Okay. So look at this. In 2021, you had the stock market going up. Okay. Look on the left, on the right hand side, stocks are rallying up. Now, what happens? You get a pullback in the stock market where it comes down on its way up, because stock markets never move in a straight line. You get fluctuations, comes up, comes down, goes higher, comes down. The stock market has a pullback. How much? 5%. What did our spreadsheet tell us? 5% monthly fluctuations. Cryptocurrency at exactly the same time has a 30% fluctuation. Normal. What do we look at our spreadsheets? At that time, the monthly fluctuations of Bitcoin was 35 to 50%. Stock markets then rally higher, and then we get another pullback of 5%. And then what do you get here? Another pullback in Bitcoin of 25%. Completely normal. Stock markets rally up again, and then you get a pullback here of around, again, 5%. Normal fluctuation. And what do you get here? You get a pullback of 50% this time in crypto. But remember, that's normal, because it's between 35 and 50% fluctuations. Okay. So you're getting a normal monthly fluctuations in crypto, and you're getting a normal monthly fluctuation in stocks. What happens? The markets take off again. Stocks rally higher. So does Bitcoin. You get another monthly fluctuation of, again, 5%. Bitcoin has another normal fluctuation of 23%. And then what happens? As I showed you, interest rates start to go up in 2022. Stocks crash. Crypto crashes. So if you can see the correlation, all you need to understand is what's driving the markets. All right. So if you guys want to catch the next Bitcoin rally, okay, I've already chucked in a lot of money into Bitcoin, okay? I did 20 grand yesterday. I already had some money in there before. I'm going to keep pumping money in there because the returns on Bitcoin are ridiculous. All right? Guys, you have 500 pounds. That 500 pounds could turn into 5 grand in the next 12 months. You have 5 grand, you can have 50K. You have 100 grand, you can have 1 million, okay? That's how crypto millionaires became available, because this asset moves 10 times more than any other asset. So what we need to look at to understand when we're looking at cryptocurrencies moving forward, the central bank is watching monthly inflation. The central bank is also looking at what's happening with the unemployment rate and wages, because they need wages to come down and the unemployment rate to go up to help inflation get down. I do explain this to all the VIP members in a lot more detail. I did a whole article on this today for the members, explaining this in a lot more detail in the private channels, okay? And then the markets are looking at these indicators here to predict where Bitcoin is going to be going, because these indicators tell us where this is going, and this is the key, where are interest rates going, okay? So, guys, if you want to come and trade alongside me and all the other members and invest alongside us and make money, please come along, okay? I've been showing you just last week as a prime example, just the results that the members were sending me, okay, from the trades that they were taking. You have members making £700 profit. We had other members sending me screenshots and results of them making £800. The results speak for themselves. I've shown you multiple times, okay? You can see members really was cashing in some amazing returns when they were training alongside me. Okay, look, £800 for that member as well. So look, the results speak for themselves. All you need to do, you can invest into your own training account. You can come along and invest with us, and you can learn a lot as well, because a lot of educational material being given to the VIP members, okay? So I hope that was educational. I'm going to do a lot more educational videos for you guys, a lot more, because I really think it's important that people I don't just like show off results of people. I think I need to like put more knowledge in your head, because I can understand that if I do that, you probably trust me more, and then you're more likely to come and invest alongside me and all the members, which is what I ultimately want you to do. I would like you guys to come and learn, make some money, get knowledge, and hopefully grow your wealth. All right, guys. So I hope that made sense. Now's the time to get into Bitcoin. Okay, you can do it in a training account. You can do it you can buy a fucking Bitcoin in a Coinbase account. You just need to buy Bitcoin. Put it like that. Okay. The key is, where's inflation going? Where is the bond market going? As I've been showing you, the 10-year government bond yield. That's the key for us to know where Bitcoin's going. And then we can invest, make money, and cash in on these market moves. All right, everyone. So if you've got any questions, please let me know now and I can answer some of your questions. I'll be happy to. Yes, I will upload this to YouTube 100%. Any more questions, guys? No? All right. Have a good evening, guys. Yeah. Look, oh, sorry. More questions. How much do I invest? Guys, you invest whatever you can afford to invest. Are there multiple entries available? Of course. You can enter multiple times. You don't even have to put all your money in at once. You can scale your way into the trade. All right. But listen, guys, any questions? All I want you to do, go into the Telegram channels, click the links, message my team, message me if you want to come and invest alongside us. But please, whatever you do, don't sit there and regret in the next 2 years. Watch Bitcoin go from 40,000 to 100,000 a coin and you missed out. Okay, you don't have to buy the whole coin, by the way, guys. This is what I want you to remember. You don't have to buy the whole coin. You can invest £300. You can invest £500. You don't have to invest 10,000 or buy a whole coin, okay? That's key for you to understand. You could buy small amounts, okay? But still, if you turn £300 into £3,000, you're laughing. You made a crazy return on your money. That's the key. All right, everyone. Peace and love. We'll do another one soon.